All right, so let's get started. Next slide. All right, so this is gonna be we're gonna be doing this training in four phases. We're gonna have phase one with the fundamentals of the stock market. Phase two is gonna be introduction to technical analysis. Phase three is gonna be putting it all together, and phase four is gonna be trader's mindset. All right, so today we're gonna be focusing mostly on this one right here. All right, terminology, orders, and price action. All right, so let's get to the next one. All right, so if you guys don't know already, TradeCom resources that you have available for you guys will be pre-market webinars. Start that around 9 a.m. every day, Monday through Thursday. Friday, I'm usually at work, so we don't get to do that. All right. Weekly watch list webinars. So we do this on Sunday night. We go over what we'll be watching for the week, earnings, and stuff like that. All right. Next thing, we have daily Q&A sessions. So I'm doing this while we're on voice, live trading all day. And in the nighttime, usually around 9 p.m., we'll do a Q&A session Monday, Wednesday, and Thursday. All right. We have the live trading stream, which is taking place from 9:30 a.m. to 11 a.m. Maybe sometimes a little bit longer depending on what's going on in the market, but 11 a.m. is usually the cutoff point. All right. Then we have recorded webinars. So these recorded webinars are posted in the webinar links in the Discord, and you guys could always go back and view old webinars at that point. Right. Live news updates. So we have live news updates in the Live Squawk channel, and also I try to post live updates in the market news channel in the chat. We have community chat for traders of all levels of experience. So no matter if you're a beginner or if you're an advanced trader, this is a very positive community. There's no hostility in here. I try to keep it nice and positive in this group. So nobody has any kind of issues with each other or them or just anything in general. Right? Everybody's here to support each other. We're all here to learn together. Even myself, I may be pretty good at trading. I feel pretty successful at it right now, but every day I'm still learning alongside you guys. All right, 24-hour, 24/7 chat room support. So we have me, Ripun, and Christopher that will be in the chat. Usually all hours. Not there are some times where we're sleeping, but um, if you've noticed, uh, Christopher, he stays up pretty late. All right, so if you guys have any questions, you got always send your questions in the chat. You'll have one of us will always be available to answer any of your questions. All right, and then we have the small business support section of the chat. That's there to help you guys outside of trading with your small businesses. We're all here to support each other. All right, so I bought a couple of items already, clothing and other things from some of our members. A lot of talent in the group. All right. Let's go. All right. So any questions on any of the resources that we have? No questions? All right. So we had no questions. Let's keep going. So fundamentals of the stock market. All right. So what is the stock market? You guys ask. Okay. So the stock market is a place where individuals and institutions can exchange shares of publicly traded companies, and it acts as a middleman for a buyer and seller to exchange shares. All right. Now, what is a stock? So, a stock is a piece of a company which gives ownership to a company's profits and assets. Also referred to as shares. The stock's price reflects the expectations of a stock investors, such as you and the market analyst, on the company's future earnings. All right. So, think of a share of a company is one big pie. Uh, this pie is sliced up into if there's 8 shares in the company, you got 8 slices of the pizza, and every single slice that you take is a piece of the company that you take, right? Any questions on what is a stock? There are no questions. We keep going. All right, so market hours, a stock market hours. A market is open Monday through Friday, and it's broken into three different categories. All right, we got pre-market from 4 a.m. to 9:29 a.m. So you usually see stocks moving at 4 a.m. You wonder why. the market opens pre-market opens at 4 a.m. and you'll see usually institutions are trading around this time, and you'll see different stocks moving from 4 a.m. to 9:29. All right. Normal market hours are 9:30 a.m. to 4 p.m. and after hours is 4:01 p.m. to 8 p.m. All right. Also, futures trading is open at 6 p.m. on Sunday and closes at 8 p.m. on Friday, but not all stocks have futures trading available. Right. This is usually SPY and these big ETFs that have futures trading, but you also have to be approved for that. All right. If you guys have any questions, just go ahead and ask them right before I head to the next one. All right. Or you guys could raise your hand in this group, I believe, and I could see that. All right. All right, so let's get to the next one. So what causes a stock's price to change? So a stock's price is changing based on supply and demand. So traders who believe a company will do well in the future will bid the price up. So me putting if I like for example today with Tilray, I hear that Tilray got a new agreement with the United Kingdom. I'm interested in that company. I feel that will bring a lot of revenue to this company. So I'm gonna demand the stocks, right? So as this demand increases, there's also multiple other people demanding the stock. You'll see this is what causes the stock's price to increase in value, right? Supply and demand, right? Traders who believe a company will do well will bid the price up, while those who do not will bid the price down, right? So you get Citron and all these other companies that think the stock price is too high. They'll short the stock and they could bid the price down. Right? Also, if there's a lot of people willing to sell their shares in a company, you could see a stock's price start decreasing in value. This usually happens when a company releases bad news, anything such. You'll see a lot of people do not want to hold their shares in the company and they'll start selling it. Right? For example, Boeing had a plane crash. I have Boeing shares. I think this is going to cause Boeing to lose a lot of money. I'm going to try selling my shares. Right? There'll be multiple other people trying to sell your shares as well. And this will cause excess supply of a stock and the demand will be low and you'll see a stock's price moving down. All right. Buyers will try to buy the stock share at a lower price and sell higher, while shorters will try to sell the stock at a high price and buy back low. This results in a change of the stock price. All right. Any questions on stock price change? No. You guys hear me?
So we always gonna be the buyer then, right?
Yeah, we are you.
Okay. All right. All
Startups
right.
are only just institutions and hedge funds. That's it.
What was the first part of your question?
We technically call buyers only, right? Not the shorters, right?
Well, it's moving on buyers and shorters. It's not just one-sided.
Oh, okay.
All right. All right. So that's all right. So key factors behind supply and demand. So we have company news, you have industry performance, investor sentiment, and economic factors. All right. So some examples of company news are mergers, buyouts, earnings, or new products. All right. Mergers such as to say one example recent, we have Tilray and Afria merging together. You've seen what happened with the stock after that. Both stocks started picking up in value, right? And new products, well, this wouldn't be a new product for Tilray, but just be a new revenue stream. They're having an agreement with United Kingdom, right? So company news, probably the best thing that could happen with a stock is having good company news or bad news. That'll be one of the key factors behind supply and demand. All right, next thing up is industry performance. So tech, financials, energy, healthcare, utilities, these are all different types of industries. One example of an industry would be the semiconductor industry. We all know right now they're all having a chip shortage, and we see Nvidia's stock price going up all day from the beginning of this week, right? So this shortage of chips is causing an excess demand of in their and semiconductors, and you could see their demand is picking up for their stock as well. All right, across the board, all these semiconductor stocks are picking up. So that's another key factor behind supply and demand. Investor sentiment is another one. High volume of buyers or sellers. investor sentiment can be seen behind Virgin Galactic stock (SPCE). Right now, investors are very bullish on this test flight window opening. We feel that the Virgin Galactic stock will break out, will pass this test flight, and we're pretty bullish on it, right? So we're all very interested buyers on this in this case. All right. Economic factors such as interest rates, inflation, unemployment, and economic growth. So economic factors, you can see last year when SPY started dropping, we had a virus. This is an outside thing, so this wouldn't be company, industry, or investor sentiment. This would be an economic factor, right? So the virus increasing over here, a lot of people getting sick. Uh, Obviously, the economy could definitely start falling because of debts, the virus spread, and companies having to go on lockdown, stuff like that. Right. So economic factors always a big factor in these supply and demands and movement of a stock. Right now we have the highest level of unemployment that the America has ever had, and we're looking to grow right now with this stimulus. All right. Any questions behind these key factors behind supply and demand? All right, no questions. So let's keep it going. All right, so some stock terminology over here. You guys want to take some notes? Let me know when you guys are good to go. When you're buying a position, you're taking a position to buy a share of a company. When you're selling the shares you currently own. Now, there's also a term of shorting a company, but we'll get into that a little bit later. Right now, we'll just stick to the basics, where you buy and sell. Right? So that's the buying and selling portion of this. Now, a bid. When you hear the word bid, that's where a trader is in the market is making an offer to buy a share. So if I have a share of Apple at $100, well, I see Apple at $100 per share, but I don't want to pay $100 per share, right? You never want to pay the mark. Nobody ever wants to pay the market value of something. They always want to get a discount. So say if I see Apple at 100, I only want to pay 99. My bid is $99 per share, right? So that's where you're going to be getting your bid from. You'll see this across different parts of the market. You see it on options as well, but bid is pretty much where buyers are sitting and where their offer is what they're willing to pay, right? Ask. So if I have a share of Apple and I have it at worth $100 per share, when I'm offering my shares for sale, I usually want to get more than what the market value is. So if I'm asking for $101 for my share of Apple, that's my asking price, right? So that's the ask. So your bid is where you're trying to buy in, where the buyers are sitting, and the ask is where the sellers are sitting. Right? Bull market. So you guys will hear bull and bear, or bullish or bearish. Pretty much what bullish means is when the market's in an uptrend condition where stock prices are continually rising. A bear market is when opposite of a bull market where prices are continuously falling. All right. So we are currently in a bull market right now. Ever since last year March, market was in a very short bear market last year. We saw SPY drop from about 350 350 to about 200, and I believe it was 220. That was a very short-term bear market, right? When the prices are continuously dropping, right? Right now we're in a bull market where stock market is continuously rising because the market is rebounding from a contraction, right? Market orders. So we have market orders when you're trying to buy or sell as quickly as possible. Market orders will pretty much automatically execute your trades at the asking price if you're trying to get in, and if you're trying to sell a stock, you're going to be selling it at the bid. The Whenever you execute market orders, you're going at the bid or ask. All right, whatever the market value is for the stock, you're going to be selling it at that point or buying. All right, outstanding shares, the total number of a company's shares that it has. So if I have Apple as a company, and Apple has about 1 million shares available for purchase. My outstanding shares for Apple is 1 million. All right. IPO, initial public offering. A lot of companies are IPOing. Robinhood will be IPOing this year, so they'll be having an initial public offering. What that means is when a company goes through the process of selling shares on the market for the first time. All right. So when a company first comes out on the stock market, they're gonna come out with an IPO, initial public offering. All right, and then we have limit order. So limit orders will only execute at a certain price, whatever you want for that trade or whatever you want to pay. All right. Any questions on terminology, guys?
Yeah, right, bro. One question. For example, like I try to buy a share, let's say Apple share, but I didn't know that much about TOS.
Mm-hmm.
Every time I tried to buy the share, it didn't go through. Then for some reason, I was talking to one of my friends, and he told me, "Oh, you have to select limit order," because I was in the market. That's why it wasn't really going through.
Okay, so you're trying to sell or buy?
All right, yeah.
Okay, so if you're trying to buy and you put a market order, this usually will go in as soon as possible. This is the fastest way to get into a stock or get out of a stock. So if you put a market, are you sure you put a market order? Because usually the limit is the opposite way around. The limit orders will take a lot longer to get in because if your limit is lower than what the
Yeah,
stock
yeah,
is trading, yeah,
it wasn't the limit order. Then it wasn't going through. Then the guy told me to put a market order or something. Yeah,
and then it went through.
yeah.
Yeah, so in that case, so for example, if I wanted to buy Apple shares and I saw it at 100 and I put a buy order, I put a limit order to buy it once it reaches I put the limit order to buy at 99, it's not going to give me it because Apple's stock is actually higher than the $99 I put.
Oh yeah, yeah. It was like that. Something like yeah. It was 120
Yes.
something. I put it as 100 years.
Yeah, so you'll have to wait until it gets to that price because that's the max amount you're willing to pay. So if a stock is higher than where your limit order is indicating, it won't get you into the stock. That's pretty much you telling them that this is the max amount I'm willing to pay. If it's at 125 and I'm willing to pay 100, I don't want to buy it. Only
Yeah, so
if it hits.
I try to buy in the money. Then I was thinking I was way too high. Yeah.
Yeah, exactly. So that's pretty
Yeah.
much the difference right there.
Thank you,
All
bro.
right. Good question. All right. Any more questions, guys? I love answering questions, so don't hesitate to
Right,
ask the questions.
right. Most of the selling you do, buying, you pretty much do market order or you do like limit order.
All right. So for me, whenever I'm doing stocks, if it depends on how what's the price action of the stock. Like if I see really bad news come out and I just want to get out as soon as possible, I'm gonna do a market order. Now the difference between these two over here is a limit order. You're gonna get a little bit more exact of a price exit or entry, whereas a market order you don't really know what price you're gonna get. So usually on Robinhood especially, there's a lot of slippage with market orders. If I see the stock at 106, I'm like, okay, I want to sell it over here at a market order. You might see that you might your order might get filled at 104. And you're gonna be like, okay, what just happened over here? That's how market orders work. They're pretty much gonna put your orders in at they're gonna have really wide margins. All right. Sorry for all the hand signs over here. As I talk with my hands.
Roy, when you exited today at Tilray, I mean, did you do market order or did you do limit order?
Limit orders. So with options, I'm mostly only doing limit orders.
Selling or buying anything?
All right. So good. Any more questions, guys, on terminology? All right, cool. So it sounds like no more questions. Let's keep going. All right. So volume. So volume is the amount of shares traded in the market over a given period of time. Uh, you can see here, volume bars are usually on the lower end of your chart, right? This is the volume average indicator right here. Buying enthusiasm. So usually when you see a volume bars getting pretty high, that indicates there's a lot of activity in a stock. Right now, where when we have our volume, when we have our volume bars as well, I like to watch a volume average line. So this tells me if this is normal volume for a stock or if it's above normal. Right. So if you see right at this point right here, this volume bar is way higher than our volume average line. So this is telling us that something very critical is happening on the stock, that it has abnormal volume. Right. And now if you look at the chart, this candle fell all the way to the bottom of its range. Who knows if the stock was in an uptrend or downtrend? But usually, this shows that there's a lot of selling pressure, right? So it's a red volume bar. If a candle is a bearish candle, you usually see a red color indicated with it. Now the color doesn't really matter most of the time. All you're really paying attention to on the volume bars is just to know that there's a lot of activity at this point. All right. Any questions on the volume bars? All right. No questions. Let's keep going. All right. So market capitalization. So this refers to total worth of a company based on the value of all its outstanding shares. All right. It's calculated by multiplying the total outstanding shares by the market value of one stock. Right, here's a little explanation right here. Picture market cap formula. You got your current market price per share, and you're multiplying by the total number of shares outstanding. Right. So say if I have my company is Apple, and I have a total number of 100 shares outstanding, and my shares are worth $10 each. I'm going to do 100 times 10, and that'll be 1,000. Right. So my market cap for my company will be 1,000. That's how you get market cap. All right. So Apple right now is $1 trillion company. I believe two trillion almost, and Amazon too, and Microsoft too. All right. Market cap. Now, also another thing I want to get to about market cap. You always want to pay attention to the market cap of a company. Uh, Trading the higher market cap companies will give you a lot more stability in your trades while investing in these stocks because they're harder to for them to fluctuate, right? Cheap companies that are about $1 million, like a $1 million companies or so, they're a lot easier. You'll see their stocks fluctuating a lot more. That's because it doesn't take much money to move their company's price, right? You could put 500, you could put 500,000 into these $1 million companies, and you could move it a significant amount because that's pretty much 50% of their market cap, right? So for me, I like to stick with high market cap companies because you get a lot smoother plays and it's not as volatile, right? If you're investing in anything for the long term, especially, you want to invest in companies that have high market caps because they're a lot more stable. You don't want your retirement accounts or IRAs or any of that to be bouncing all over the place, right? So stick to high market cap companies, higher quality. All right. Now bid and ask. So we went over bid and ask in the terms. So here's a little level 2 explanation over here. So the bid is the price where a buyer is willing to pay for a share. The ask is a price a seller is willing to sell their shares. Right. So if you're looking at level 2 on your charts, you have this feature on Thinkorswim. The left part over here is the bids. These are exchanges over here. This is why you see EX. This is for Fubo, right? So Fubo stock price at this point when we took this picture, it was at 36.48. Now you can see the Nasdaq, the EDGX, Arca. These are all different types of exchanges. You also have New York Stock Exchange, stuff like that. They'll all show up over here. You're gonna see where they're willing to pay for this stock, right? Where the buyers are sitting. So if, usually the highest one on this list is the closest bid, and the highest one on this list on the right is the highest ask. All right, these are where your sellers are sitting, and this is where your buyers are sitting, and this is level 2. This is your level 2 chart on your stock charts. All right. Now this number over here represents how many orders. Usually, I believe this is in the hundreds. So if you see a number 2 here, that means 200 shares are they're trying to buy 200 shares at 36.20. Right. Whereas over here, 25, that's multiplied by 100. So 2,500 shares are looking to be sold at 36.25. All right. Bid and ask. Now, find level 2 very useful, mostly on scalping, right? You're scalping, you're getting in and out of trades very quickly, and you just want to know where stocks might stop or where there's a wall or where there's a support. All right. Any questions on this bid and ask? You might need some
These
water.
are the market maker.
Yeah, so these are market makers over here. So pretty much sometimes on this level 2 as well, you gotta be careful because you'll see some very large orders over here show up. But also when you're looking at level 2, there's also time and sales. You'll see the time and sales will tell you how many stocks actually got executed at these prices, right? So sometimes you'll see like huge numbers show up on this. This would just be to scare you out. So as you guys get a little more in depth with trading, you'll start to notice this, and I'll go over it a little bit later. But for now, we'll stick to the basics, right?
Right.
All right. So next one. So how does going long work? All right. So going long is a traditional way of investing in the stock market, where you profit when the value of your shares increase. All right. So if I buy Apple share, it's worth $100 per share. I want it to go up in value for me to make money. That's me going long. All right. You believe the company's share price will increase. Here's our example right here. A share at $50. You buy it. The share price increases to 60, and you sell it. The share for a profit for $10 per share. Right. So I bought it at 50. I sold it at 60. The difference between where I buy it and sell it is what my profit will be. All right. Now, short selling. So this is what's going on right now in the market. Pretty much it's the talk of the year. A prediction that a stock's price will decrease. All right. You're going to be profiting on the decrease in the price of a stock, and this is done by the investor borrowing shares from the broker. So our broker is TD Ameritrade at one price. So if I borrow all right, so I'm gonna explain that in a bit. You're gonna borrow it from the broker at one price, waiting for it to drop to a lower price, then returning the borrowed shares to the broker and pocketing the difference. Right, when a short seller wants to close a position, they cover their position. This kind of trading is done by selling high and buying low. All right. Now here's a little explanation again. So when you're going short, you're going to be profiting on the downfall of a stock. You believe a company's share price will decrease. You're going to sell 100 borrowed shares at $50. So you're borrowing them from TD Ameritrade at $50 per share. The share price drops to $40 per share. Now you're going to buy back in your 100 borrowed shares at $40 per share. You're going to go buy it. This is where you're going to cover, and your profit is $10 per share when you return it. In other words, cover your position, right? So I'm going to borrow from TD Ameritrade at $50 per share. The stock's price is going to drop to 40. Now I'm going to go buy in my own new shares at $40 per share. And when I'm going to return these shares to my broker, and I'm going to pocket the difference, right? So all I owe is the broker. All I owe TD Ameritrade is 100 shares of this company. I don't owe them $50. I owe them 100 shares, right? So regardless of the price of the company, I just owe them the shares. So if I borrowed it at 50 and I'm giving them back the shares at 100 shares at 40, that the the pretty much the difference right there, that $10 difference, I'm just gonna pocket it. And this is how short sellers benefit from a stock dropping. All right. You see Citron, Melvin Capital, Citadel, all them, they're usually big short sellers. All right. Any questions on short selling?
We able to do short selling or and does it have a duration or anything duration period, like you're borrowing the shares?
Yeah. So when they borrow these shares, they usually have to pay a fee for borrowing it as well. And also, I believe there's a certain amount of time that you're allowed to borrow these shares for them to continue down. All right. So that's usually the short ratio.
Yeah, as a new trader, you shouldn't be short selling.
Yeah. So try to avoid short selling as a new trader, or it will definitely confuse you guys. All right. But just it's good to know what it is. All right. For me, I didn't really short sell a lot in my trading career. I really didn't like looking at stocks for downside plays. By the time I found out about short selling, I was pretty deep into options trading. All right. Now, also with short selling, you have unlimited risk on a stock, right? So this is another reason why I avoided short selling. If a stock continues to go up, like exactly what happened with GameStop last month, now if you shorted a stock at 50 and it keeps going up to 500, now you're gonna owe all that money if you kept holding it through this uptrend. So this is another reason why you want to avoid short selling. It's good and all, but if a stock continues to go in the upside, you're gonna be owing money. You're gonna be in debt, and that's the last thing you want to do when you're trading, right? You don't want to owe money that you don't have. And also, in order to short stocks, I believe you have to have a margin account. So you guys won't even be able to short stocks on Thinkorswim anyways, unless you have a margin account. On top of that, um, Robinhood doesn't even support shorting stocks. All right. Short selling stocks. So here's a little diagram of how it all works out. So you have your brokerage right here, TD Ameritrade. The short seller borrows the shares from a broker for a small fee, say $5. I'm gonna borrow 1 share of Apple at $100 per share. The broker is gonna charge me $2, and now I'm the short seller. I'm gonna take it to the market. I'm gonna sell my borrowed shares at the market price. So market price dropped to 90. The shares drop in value as anticipated by the short seller. Okay, so at this point, the shares are 90. Now I'm gonna buy the same number of shares at a lower price, and I'm gonna pocket the difference, right? I'm gonna buy a 1 share of Apple at $90 per share, and this share that I bought at 90, I'm gonna keep for myself, and I'm gonna return that share of Apple that I borrowed from them for 100. I'm gonna return it at 90, right? So that $10 difference is what I'm gonna keep. All right. Any
Why
questions on
why
short selling?
why they allow the short selling? Because it's kind of a killing the the company stock. I mean, value. Why they are
Yeah,
allowing the
they
short?
allow it. It's a lot of reasons why they allow it. I mean, that's how the market works pretty much. Um, these hedge funds are just the main ones short selling. It's a way of pretty much keeping checks and balance in the market. All right. Now let's go to the next one. So the pros and cons of short selling. So the pros, you're gonna benefit on the decrease in the stock's price. So you have one pro. Now the cons of short selling, your loss could be more than your initial investment. You could get a margin call requiring deposit of more capital, and also your profit is limited to the total value of a share, right? So if I short Apple and it's worth $100 per share, the max amount that I can make off of that position is $100. That's if Apple goes to zero, right? Stocks are usually trending in the upside, so this is another reason why you kind of want to avoid short selling, right? Now you could get a margin call. So usually, if you're shorting a stock, you have a margin account. If your margin goes below a certain threshold, you're um you're gonna be required to either sell your stock, sell whatever stocks you have to cover that capital that's needed to keep you above that point, or you're gonna have to deposit more money, right? So say if I have a $100 margin account, and they tell me that my margin maintenance is like the account value I have to maintain is $80 for my account, and I drop below that $80, at the end of the day, I'm gonna get a margin call saying that I'm below my maintenance level, and I either have to deposit the amount of money to push me above that $80 mark, or I have to sell enough shares to cover myself above that $80 mark, right? And then usually, if you get a margin call, if you don't cover that margin call, you're gonna be restricted from trading or using that broker for probably 90 days, right? I got a margin call before when I first started on Robinhood. Pretty much, I didn't know what I was doing with the margin money, and I fell below my margin maintenance, and I never covered it, and they gave me a margin call. Right, so it's like a little red flag. All right. So, any questions on short selling? All right, no questions. Let's keep it going then. All right. What is a short squeeze? So, a short squeeze happens when a stock's price increases sharply and forces short sellers to exit their position, ultimately adding towards the upward move of a stock. Right. So today, for example, with Tilray, we had a short squeeze. Last month, we had the same example with GameStop, AMC, all these companies. These were all short squeezes. Right. So if a lot of people are shorting a stock at this point, and it has a sudden move towards the upside, say for example, um, there was good news on the company, and there's a big short interest of 50% of the people in this had this stock was shorting it. when the stock makes this big move up, all these short sellers have to cover their position and buy in, and that causes an additional buying pressure on the stock and pushes it upwards. Right? So these kind of plays right here are very profitable if you could catch them. For example, today with Tilray, we made a lot of profit off of it because these short sellers were all being squeezed out of the stock, and it created artificial buying pressure. All right. Any questions on short squeeze?
Roy, how do you know when the short squeeze is over?
All right, so usually you'll see a lot of selling pressure kick in at the end of the short squeezes. If you see, I can pull up a chart right now, actually, that'll be pretty good. So if you look at GameStop, usually you could tell by the chart pattern as well. You see here, GameStop was short squeezing up, was this recent? Okay, so yeah, this is all the recent stuff. This is daily, so these are daily candlestick patterns. Now, if you see this initial move over here was up. Now, at this point over here, it's a lot better to keep seeing GameStop on the 4-hour chart because you're going to see what happened intraday. Every time GameStop broke its high over here, all the people that were shorting it at this point, they'll be forced to buy into the stock because now they're past their margin maintenance level. They're getting margin calls, or there's a lot of more upside upside possibility with potential with a stock that they want to exit that position because they're going to be losing money if they hold on to it, right? Well, these guys are going to cover their position. They're going to buy into the stock. It's going to cause an additional upside move. Now, after this continues up, usually you'll see a short squeeze end with one of these long upper wick candles right here, right? So you see this upper shadow on the candle. This indicates a lot of selling pressure. So sellers were able to bring the stock's price down from 513 to this point over here, which is about 350. That's a big drop right here, right? So usually when you see this, this happen on your big time frame, even on the daily or on the 4-hour, you usually see a very strong pullback very shortly after, right? You'll see selling pressure kick in. All right. A little off topic, but going back to margin accounts, what if you're in profit with a margin account? I had a friend that was up but only owed 55% equity. I was wondering how that would have worked and when he sold. All right, so margin accounts are great when they're going in your direction. Now, I used to use margin as well on Robinhood. Pretty much, I was paying a fee. The fee was about $100 a year. No, $100 a month, and they were giving me $100,000 of buying power to add to buying stocks, right? So for options, they don't allow you to use margin because it's a lot more risky trading options with margin money, right? They don't. What they typically want you to use the margin money for is for low risk and low volatility companies, right? So options is very very volatile, so they won't allow you to use margin for options, right? So if I have $100,000 in my account and I want to buy more of this company, but I don't have the money, this is where margin comes into play. Usually your broker will match whatever money you have in your account. So if I had 100,000 and Robinhood was matching me 100,000, now I have $200,000 available to buy different stocks, right? Yeah, red candle means selling, and green candle means buying. It doesn't really mean selling and doesn't really mean buying. What it means is I'll get into candles in a little bit, right? That's a little bit later on. All right. Now, so short squeeze. So we're done with short squeeze. Let's get to the next one. Stock orders. All right. So we're gonna be getting into orders now. It's about 9:38, so I'll give you guys about a 5-minute break. I'm gonna go get a water as well because I feel my throat getting dry over here. All right. Take a break, guys. 5 minutes. We'll be back at 9:45. All right. I'm gonna pause it. All right. Be back. All right, I'm back. You guys still here?
Yeah.
All right, let me get situated over here, and got 3 more minutes of this break, and then we'll get started again.
Quick question. Did you ever go over how to do that? How to fix the 15-minute delay? I just got back at 9.
Okay. The 15-minute delay, you gotta call them. Usually, if you if there's a issue with your with the level of experience you put, I believe that's why they put that delay there. But you could call them to ask them to change your delay. They're gonna ask you a couple questions. If you're a professional trader or so, you're gonna tell them no, you're just beginning and you're just using the app for your personal use, and they should remove the delay for you. All right.
Yep.
All right. All right. How's everybody liking the presentation so far? You guys learning?
It's great.
Yeah,
Awesome.
better than college.
Yeah, definitely you learn a lot. I remember my first day going to these classes as well.
Whenever you get a chance after the slide presentation, if you can go over bid and ask more, a little bit more in depth.
Bid and ask.
Yeah.
All right. So we'll go over that a little bit more. What you want? I could go over it right now, actually.
Yeah.
Did
Sure.
you go over options yet?
No, the options will be a lot later. This is just strictly beginning stuff.
Okay, cool.
Yeah, this options are a little bit more advanced. All right. So what you wanted to know about the bid and ask?
Just go over it, I guess, a little bit more in depth, if you can.
All right, bid and ask. All right, so the bid is pretty much where buyers are sitting. So what people are willing to pay for this stock, and the ask is pretty much what people are willing to sell the stock for. So if you're in a stock, let's say you have a share of Fubo, and you have it over here at 36.48. Now you want to sell it. You want to know what people are willing to pay, right? So what I could see from this level 2 chart over here is that people are willing to pay a minimum. They're willing to pay $36.25 for my stock, while the price is at 36.48. All right.
All
Now
right.
the bid is what people are willing to buy. So if you're looking to buy into this company and it's at 36.48, you don't want to pay the you don't want to pay how much they're asking for, right? So you're trying to buy into a stock. All right. So actually the bid is the opposite way around, right? And the bid and the ask, right? If you're trying to buy into a stock, you're gonna be looking at the ask, what sellers are asking for. So they're asking for $36.25, right? Now, if you're trying to sell a stock and you have it, you're gonna be looking at what people are willing to pay for it, right? Now,
So the bid and ask.
I could kind of relate it to sneakers. So I don't know, are you into sneakers like that?
Yeah, somewhat.
All right, so say these new Jordans come out and they come out on the market where it's $170 for a pair.
Yeah.
Now, me as a buyer, I don't want to pay 170, right? I want to get a discount on the sneakers. I want to pay maybe 150, right? So if I want to pay $150 for these sneakers, I'm going to show up on the bid as 150. Now, there might be some people that want to pay 130 and then 120. They'll be a lot lower than me. The highest bid, the person that wants to pay the most will always be at the top. Say if I have the sneakers, I have the Jordans are worth 170, but I don't want to sell it for 170. I want to make some profit off of it. So I want to sell it at 200. And then there's people that want to sell it at 250 and then 300. You're going to see the people, the higher the price goes that they want, the lower it's going to get on here. So the people that want the least amount of money for the sneakers, they're going to be at the highest point of this ask chart over here.
Okay.
Does that make a little bit more sense?
Yeah, it does. And in relation to when you're, I guess, doing a stop limit and stuff, this is why you need to know the bid and ask, correct?
Yeah, so you want to know where there's a lot of people sitting and willing to buy, or where there's a lot of people willing to sell.
All right. Thank you.
All right, you're welcome.
So Rai, in this process, if you try to like with the fat finger or something, if you give a wrong price more than what market is or something like that, what happens? Does the trade will go through, or it gonna reject, or are it gonna buy it the market price, or it buy it at the price you put it?
So if you put an order that's above the price that it's at,
Yeah, with the fat
okay,
finger or something.
if you're trying to buy in, right?
Yeah, buy in with the fat finger or something. Maybe when you're trying to order, some zero got
And
added
you
or
and
one
you
got.
yeah, you put all right. So if you put something higher than where it is right now in the market price,
Huh?
is gonna give you like say if a stock is market price is $36 and I put that I want to buy it in at 40, it's gonna give me at the asking price. It's not
Okay.
gonna fill you at 40, obviously if it's at 30. It's gonna
For
fill you at
example,
the bid.
like for example, if you try to do limit order, because market order, then you don't give the option, right? So you just gonna buy you the market price, whatever it is. So with
Yeah.
the limit order, for example, you try to put limit order if there is any fat finger or something, and then you put like added zero added, or you didn't pay
No,
attention.
it won't fill you at that price that you put if you made a mistake.
Oh, okay, got it.
It only put you at somewhere close to where the stock is trending. That'll be kind of messed up if somebody put an order for 300 and something is worth $2. All right. All right. So any more questions before we get started on stock orders?
Market order. When you do a market order, let's say, for example, like pre-market or aftermarket, um, how does that order, like, does the order is actually being buy at the time the market open, or is actually being taken during pre-market or aftermarket?
Um. Okay. Yeah. So I'll get to that in a bit. That's included in this piece over here. Any questions on any of the previous slides on that first part one of our of the slide? Any questions on that? No questions?
Good.
All right, cool. So let's get started on the second part. So it's very long, right? So we actually might end up past 10 a bit over here. All right, so let's keep going. The recording is still going. All right, types of orders. So we have normal orders and then special orders. All right, so we have limit order, market orders. Under normal orders, we have limit, market, stop loss, and under stop loss, you have a market stop loss or a limit order for a stop loss, right? And then you have your special orders, which is cover order or a bracket order. Usually, a bracket order is a OCO. It sets your lower limit and your upper limit. All right, a little complex, but we're getting to it. So types of stock orders, you have market order, limit order, stop loss order, a day order, a good till cancel, and extended hours order. All right, so we're gonna be getting into Bernie's question. That was Bernie, right?
Yeah, it was me.
All right. All I see is iPad 2. All right, market order. So a market order is the simplest and quickest way to execute a trade. The order is executed by filling your order at the bid price or at the ask price, right? So the pros of this is the fastest order execution. The cons is that your price where the trade is executed can be higher or lower than the current value. All right. So that's a market order. Fastest execution, that's pretty much the best part about it. If you want to get in or out of something very quickly. All right, next one we have is a limit order. So in order to buy or sell a stock at a set price, pros, you're gonna get this gives you control over what amount you want to buy or sell your shares at. The cons of a limit order is that execution is not guaranteed. Right, so a lot of you guys explained that you had that issue in the past, that you put your limit order and your trade never got filled or never executed. It's because your limit order, if the stock goes above the price that you're willing to pay, and won't execute. It'll always wait to get either at your limit order or below it. All right. All right. Stop loss order. So your stop loss orders are used for limiting your losses by selling your shares at a set price. The pros of a stop loss is that it helps you exit your trades fast when a certain price is reached, right? And the cons is sometimes it does not work if a stock's price gaps below your stop loss price, right? So if I have Apple at $100 per share and I don't want to lose more than $5, I'm gonna set my stop loss at 95. And once Apple gets to $95 per share, it would automatically take me out of the trade, right? That's for stocks and that's for stop loss on stocks, right? Now the cons of this is that if Apple is trending down, say if I bought it at 100 and I don't want to lose more than 95, if it's trending down, like say it's going 99, then 98, 97, and then all of a sudden it goes from 97, bad news comes out, and the stock drops to 85. Now it skipped right over my stop loss, and since it skipped right over my stop loss, my order won't be filled. All right, so that if you guys see that sometimes your stop loss doesn't get executed, that actually happened to me today with my Tilray contracts when I was getting a haircut. Uh, I had my stop loss order set to sell all 14 of my contracts, and it only sold one because then at that point Tilray took a pretty deep dive, and it went right over my stop loss level. All right.
To do it manual after that?
Yeah, I had to do it manually, but at the point when I pretty much noticed it and I saw it, it was recovering at that point, so I just canceled it in total. I just let it run. Right, so it's not always guaranteed if you're using stop loss, but it's very helpful if it does work out. In a very rare instances, it won't work out. For me, most of the time, it works out. All right. Any questions on stop loss? All right, let's keep going. So time and effect orders. So this is what you were asking about, Bernie. Different times that you'll set your orders to execute. Some of them will be extended hours and stuff like that. So your day order is gonna set your time period for your order to be only during the market hours, 9:30 to 4 p.m. and it cancels your order once the market closes. So if I set an order to buy 100 shares of Sundial and it's a day order, it's gonna whenever you're setting your orders, it's gonna ask you for what kind of time and effect you want. If I set it for day, um, that I want to buy Sundial at this price between 9:30 and 4. If it ever reaches that price, like say if it's $2, if I set the price for $2 and between 9:30 and 4 it reaches $2, then cool, I'll get filled in on my trade. Now, if it doesn't ever reach $2 between 9:30 and 4, at 4 p.m. you'll get a notification that your order was canceled. Right? This is what a day order is. Right? It will cancel it once the market closes. Now, if you don't want it to ever cancel and you just want it to always stay at $2, you're gonna change it from day order, you're gonna change it to a good till canceled order. Right? So you're gonna set your time period for your order until you cancel it. Now it could be uh a couple of days or whatever it takes. Like I put the order in today on Monday. I want to buy Sundial at $2 and it didn't make it today, but 2-3 days later it makes it to $2. Since I placed a good till canceled order, it would fill me in at that $2. All right. Now the next part of that is gonna ask you what kind of hours you want your orders to be in place for. So if you wanted to extend after hours, but you're gonna click extended hours, and it's pretty much gonna set your time period for your orders um, to market hours plus extended trading hours. So on Robinhood, the extended trading hours are 9 a.m. to 9:30 and 4 p.m. to 6 p.m. So you guys will notice like for example when I took the AMC trade a couple 2 weeks ago, I bought shares after the market closed on AMC because the options ended at 4, but I saw AMC breaking out above a critical level, right? So I didn't want to miss this move up, so I bought shares on AMC and I placed an extended hours order. That way I was able to get filled after 4 p.m. All right, so does that answer your question, Bernie? You got any more
Yeah,
questions?
actually. Thank you.
All right,
So, Roy, this is for Robinhood, right? How about TD Ameritrade? They allow up to what time?
All right, so TD Ameritrade, it allows you to make these orders until 8 p.m. And I believe it starts at 7 p.m. for the pre-market orders. For shares only though.
Yeah, got it.
All right. Now, all right. So that's orders. That's pretty much covers orders. Now let's get into price action. So you got a bull over here and a bear over here. So this is the biggest thing between price action and what's going on between the bears and the bulls. All right. So what are stock charts? So stock charts display the price of a stock over a given time frame. They are made by plotting the price, which is the y-axis, straight up vertical, of a stock across a line graph, which in comparison with the time it was at that value, right? The axis, all right. The horizontal line, right? So the charts are the main resource for information as a trader. All right, the biggest thing as a trader is going to be looking at your charts. All right, so here's a chart example right here, SPY, components of a chart. Now I don't have it labeled, but I'll point it out to you guys right here. So we have a chart here. So these are your candles. You have your red and green candles. Red represents when a stock price moves up. Green represents when a stock's price moves up, and red represents when it moves down. All right. This lower part over here is your volume average. Uh, these are your volume bars over here, pretty much how much action is going on with your stock between each specific time frame with these candles. Here's this area of your chart is where you're going to be putting your ticker symbol in. You see right here where it says SPY 1Y 1D. This is 1 year, 1 day. So this chart is representing every candle here represents 1 day, and this is over a 1 year time period. All right.
And Rai, why can't we see volume instead of volume average? What is the difference? Like, why we need to see volume average instead of volume?
All right. So you want to see volume average because this pretty much is going to tell you where a stock's picking up some activity, right? So if a stock's about to break out, you usually want to see a high volume at these breakout points. If you look, SPY looks like it peaked over here once. It peaked kind of close over here again. Every time it got to this point over here where it peaked, you would see the volume pick up very high on these candles, right? So a lot of activity takes place on these candles over here, right?
You
That's
enable to see volume like that on the application.
all right. So I'll get to that after this. So you know what? Yeah, we could get to that right now actually. So it'll be a lot easier. I'll help you guys set up one of your charts right now. All right. So everybody pull up your TD Ameritrade account. Let me know when you guys are all in. Now it's gonna be a blank screen like this when you guys start it, or it might look like this. What you want to click on is charts over here, and you'll have this screen over here now, right? So you could click on this little arrow here to put this minimize this little side panel, and you'll get a full screen of one chart here. All right, so everybody ready to go on the charts? Let me know when you guys are all good to go. Give you guys about 2 minutes to start up your apps.
How how do you close it? Like one of mine's is opened up right now. How do I just shrink it?
The left panel over here,
A chart is opened up right now.
a chart. You click over here. You're gonna delete all the information, whatever ticker you have, and you're gonna click enter. It's completely fine if you have a chart up anyways. All right. All right, so let's get started over here. So you're gonna, okay, so we're gonna minimize this. SPY, right? SPY. Gonna click enter. Now you have a chart over here, right, guys?
That's SPYV.
Oh, hold on. All right, so everybody has SPY pulled up on their chart.
But it doesn't have all the red lines like that.
You're gonna change it.
Why doesn't theirs have red lines?
Oh, you mean that?
This should be default setting on this on this one.
No, because they're probably was in a 4 hour time frame. And when I was in a 4 hour, you don't see
Oh,
it.
okay, yeah. All right, so it won't have these red lines unless you're on the daily. So when you guys click in SPY, you're gonna click enter. You're gonna go over here on the top right. You're gonna see it says time frame over here. This D over here, right? It might give you a 4 or a 1 or a 30 minute. Make sure it has the D over here, right? For 1 day, 1 year, 1 day. All right, did that fix the red lines?
Yeah, that fixed it.
All right, cool. Now, what you want to do is you're gonna get rid of this lower volume chart over here. We're gonna be adding our own one, right? So we don't. This volume is good and all, but we want to see average volume line to be able to tell when the volume kicks up higher than normal, right? So what you're gonna do is you're gonna right click this. Nope, you're gonna click right here. Where is it?
Go to studies.
No, right here. Our chart settings,
Oh,
right? We're right next to your time frame setup. You're gonna click on the gear, and it's gonna pull up this little chart settings menu over here. You're gonna click where it says equities, and where you see volumes, where you see volume over here, you're gonna uncheck that volume subgraph. All right. Once you click that, you're gonna click OK, and that should get rid of that lower volume part right there. All right, everybody's at this point.
Yes.
All right, cool. Now we're gonna add our own volume on the bottom part. We're gonna click Edit Studies. You're gonna type in volume AVG. All right, everybody at this point. Once you
How
click,
do you get to edit studies?
all right, so you're gonna click Studies over here on the top right. You're gonna get a little drop down menu, and you have Edit Studies here now. All right, you're gonna click on Edit Studies,
Thanks.
and you're gonna go type in volume average in this menu over here on the left. All right, so volume AVG. Once you see it here, you're gonna double click it. All right, everybody's at this point. Now, once you're at this point, you're gonna change this 50. You're gonna click on the gear over here. It's gonna pull up another menu here. Now, what you want to change it to is 20. Right, so this is gonna give you your length of the length of time that this the volume bar the average volume line is gonna be going off of 20 periods. Right, you can look over here. It tells you the number of bars used to calculate the volume simple moving average line. All right. So 20 is a good amount of periods, a good amount of volume bars. Right now, for me, I don't care if the candles, if the volume bar is red or green. A lot of times it would get a lot of people confused, so I change mine to white. All right, I change both of them to white. If the volume bar is red or green, it doesn't really matter. You're gonna pretty much get all your information from your candles. Everybody's good on the volume average part over here. All right, cool. So you're gonna click OK and OK. All right, now you're gonna have your volume average with your line, and you're gonna have your chart. All right. So we're good at this point. Now we could tell where volume picks up. So
Right, for me, actually, it's coming up as a boxes. I don't know why.
boxes.
Yeah.
All right, so let's go edit studies. Maybe you clicked on something here.
No, actually, I have something before, so maybe.
Okay, so if you have something before, then it's all personal settings. So maybe you have it as a style. You have to change your style.
Oh, from the studies and edit.
So if you have your style set to this over here, then that's probably what you have. That's why it's showing as boxes. All right, you want to change it to the second one over here, where you just have bars. It's all personal preference. For me, I like to use this. It's a lot simple. All right. Now, once you add that, things I like to look at on the high time frame, such as the daily chart, is the simple moving average. So you're gonna type in simple. Well, you could type in SIM, but you're gonna be looking for this one that says simple moving AVG. All right, you're gonna click this 3 times. All right, somebody's mic is on. All right, so you guys good up to this point. You're gonna click this simple moving average 3 times. All right, 3, 2, 3. So I have 3 simple moving averages over here now. What you want to do is you're gonna edit each one. For the first one, you're gonna put 50. So this is gonna give you your 50-day moving average. This really gives a lot of issues for me sometimes. It doesn't let me 50. Oh my god. If the mouse is not here, it won't let you click on anything. 50. I'm gonna change this one. I like to keep this one as the green line. And that's all I really change it. So it's gonna give me my 50 moving average, 50-day moving average. Next one you want to add is your 100-day moving average. 100. And I like to put this one as yellow. And click OK. You're gonna click the gear again on the last one, and you're gonna change this one to 200. Right, that one will be for your 200-day moving average, and I put that one as red. All right, okay. Everybody's good up to this point?
What was the third one?
200.
200 red.
Yeah, it's red. Are you guys good here?
What's the difference between the simple moving average and the exponential?
So the exponential, what it does is okay, so I'll add it to my chart here. Click OK. Now you're gonna have your moving average lines on your chart. Now the exponential, if you add it to your charts, is gonna put a lot more weight on the closer prices compared to all the previous candles, right? So you're gonna see the exponential moving average will move a lot more quickly in terms of what's happening closer in the closer range, right? So if you want to add that too, you could. We're gonna edit studies, exponential. You're gonna see moving average, moving AVG as exponential. You could click that too. And on the daily, I believe they use the 9 and the 21. Right, so if you want, you can add both. The thing is too, you don't want to have a bunch of indicators on your charts because you could end up getting confused, right? I'm gonna add the 21 and the 9 just so you guys can see. I'm gonna make this one let's make this one purple. Now I have my 9 EMA and my 21 EMA on the daily chart, right? So 21-day exponential moving average and the 9-day exponential moving average. So you're gonna have 5 different trend lines over here.
What color do you use for the 9?
I use blue. All right, so I never
Could you
really
repeat the
look at all
last
this.
one? Which was the last two that you added?
Moving average, exponential.
Thank you.
All right, you guys good here?
You could screenshot this just in case.
Okay, yeah, I'll screenshot it.
No, not you, them.
Oh yeah, you guys could screenshot it if you guys want.
Yeah, and Roy, how about VWAP? You do that also, right? VWAP.
Yeah, so we're gonna do view up on a different one. So once you're done with this one, you're gonna click save. I'll show you how to do that in a minute. So everybody's good on this one? This is for long-term trend analysis to see if a stock on the long, this is for buying stocks on the long term, and seeing certain bounces and stuff on the long-term levels. All right, you guys good here? All right,
Yeah.
so if we're all good over here, now let's zoom in a bit here. You guys are gonna see. So the exponential moving average compared to these long-term simple moving averages, you're gonna see that the EMAs are a lot closer to the candles than the moving averages, right? You guys see that? So this is this close this EMA being so close to these moving average the candles, is because there's a lot of weight on the closer candles compared to the longer period candles, right? So usually, if you some people, they like to take some strategies on this moving average. When the 9 EMA crosses over the 50-day moving average, they'll indicate like a short-term pullback on the stock, stuff like that. Right? So some people use moving averages for that reason.
Hey, well, I had a question, right?
Yeah.
You see at the side of your chart there, for each line it gives the highlighted numbers. It doesn't show up like that on my screen.
Oh, it doesn't show up on your screen like that? All right, so to do that, you're gonna click Edit Studies. You're gonna go to each gear over here. You're gonna click on the gear, and there's gonna be a piece over here that's gonna tell you Show Price. Where is it? Show Title. Show Plot Last Value Bubble on the Y-axis. All right, so it's this one right here. Right? Make sure that this is checked. Everything here is checked. Is everything checked?
Yeah.
So you're good here, right?
I think I have to zoom out. Let me just check it.
All right, so you're gonna click OK, and then it should show up there. Is it good
Yep.
now?
Yeah, it is. Thank you.
All right, you're welcome. All right, so you guys should have all your trend lines over here set up now. Now for me, I don't really keep these EMAs on here because since they move so volatile with the stock, I don't really follow them much. All right, so I'm gonna go ahead and remove them, but that was just to show you how the EMAs look. All right. So for me,
Thank you.
keep it simple. I just keep the 50, 100, and 200. Right, so I deleted the 50 by accident, so let me add that back. Gonna edit this 50. Now I have my 50, and this was green, and we're good to go. All right, we're gonna delete this one. Now we're good. We have 50, 200, and 100. All right, apply and OK. All right, so you guys good over here?
Also, do you save this one somewhere, right? I mean, then whenever then you can load something.
I didn't hear you clearly.
Yeah, you could save those. You could save your whole workspace and the
Okay.
studies as well.
Yeah, so that's what I'm getting to next. Everybody's good up to this point, right?
Yep.
All right, so what you're gonna do is you're gonna save this study. You're gonna click on studies over here. You're gonna get the drop down menu, and it's gonna see save study set. All right, so what you want to do over here is you're gonna click on that, and you're gonna set this as 50, 100, 200, SMA. All right, simple moving average. Now, whenever you pull up any charts and say that you don't have any studies on the charts at all, you could just click on that, and it will automatically pull up those indicators on your chart. Right? So you're gonna have your volume average, you're gonna have your simple moving average lines. All right, you guys good on that? All right, so next one now you want to move into now is for day trading. For my day trading, I'm not using these simple moving averages. They're only good for long-term charts. On day trading, I'm using a VWAP. All right, so we're gonna go to edit studies. We're gonna remove all three of these lines of these studies here. We're gonna type in VWAP. All right, so we got VWAP over here. Now you could also add the 9 EMA. So, well, for now, I'll just avoid the 9 EMA. The VWAP will be enough, and the volume average. All right, so this one you don't have to do any editing. You could leave it just as it is. You're gonna click apply and OK, and you'll see VWAP on your charts now. All right, you guys see that?
Yo, Roy, quick question.
Could you do that back one more time?
All right, so you're gonna go to studies, edit studies. You're gonna type in VWAP on the left over here, and you have it right here. You're gonna double click it, and it should show up over here.
Yo, Roy, quick question. What's the difference between the 9 EMA and 21 EMA? Is it just the trading sessions?
It's the difference is the amount of periods that it goes off of, like amount of volume, the previous amount of candles.
So is that saying 21 days or?
No, it's 21 candles. So depending on what chart you're looking at, if you're looking at the daily, it would be off of 21 days. If you're looking at the 9 EMA on the 5-minute chart, it'll be off of the past 9 5-minute candles. Got it? So
Got
it's
it,
just
thanks.
off of every single period. All right. So everybody's good here with the VWAP. You guys have it added?
So just VWAP, right? I mean, do you added VWAP? I mean, VMA too?
Which one?
Did you do EMA also for that or just VWAP?
Just the VWAP.
Okay.
All
And
right.
then
So
we need to save that, right, too?
yeah, you're gonna click Save Study, and you're gonna write this one as day trading. Right. So this is what I use for day trading mostly, just the VWAP and this volume average over here. Right. Now, if I'm in an uptrend like Tilray today, now in this case, I would want to know where the EMAs are if there's something is uptrending, and then I'll add the EMA over here. Click Edit Studies, Moving Average Exponential. Or I could just type in EXP. You got Moving Average Exponential over here. 9 is automatically there, and you could click OK. Right now, you have your EMA as well added to your charts. Right, you could save this if you want as an extra one. Save study set, day trading plus 9 EMA. All right. So if you have something that's going in a strong uptrend and you want to know where you're going to exit, that's perfect for knowing where you want to exit. For example, over here with Tilray yesterday, we were catching Tilray on the move up. Now we were holding it as long as it held our 9 EMA. If you look at this candle right here, it broke below our 9 EMA, and that's where our exit was on this trade over here, this day trade. All right. So 9 EMA is very good if you're having something with a solid trend, and you want to know where's your good exit on your options trades. All right. So everybody's good on.
EMA was
Yeah.
the violet.
No, the violet is VWAP. The EMA will be blue.
Yeah.
All right. Everybody's good on the charts over here.
So Roy, when you save it for the day trading or long, I mean, to SMA, you change the timeline there, or you it doesn't matter. Like the 5 minutes, 1 day, 1
Oh,
year.
it will follow the same thing on everything.
So we don't
Yeah.
need to much worry about that, right? Or we need to
Yeah.
change.
No, you don't have to. It will follow you every single time frame you put. Now, for using the VWAP, you only want to use it for intraday action. So when you're looking at VWAP, it'll only be for each day. You can't look at VWAP over multiple days because if you look, it's very erratic, right? It only works during market hours. Strictly for intraday reading.
Hey Roy, what was the exact name for the 9-day EMA?
9x moving average exponential.
Cool, thanks.
All right. All right, so you guys should have your two main chart setups over here, your studies. So whenever you want to pull up things like how I do, you guys could use those different studies sets over here, right? SMAs and day trading. That's the main ones I use. All right, recently started using EMA as well. All
So
right,
the day trading study is just the
for
the
day trading.
yeah, the day trading study just has the VWAP and the
EMA.
other EMAs, right?
Yeah.
There, what do you use? Because under the 5 minutes thing, if you expand that, you have so many options. What do you use that? I mean, I have lot many actually. What are useful? I mean, we can add these, right, if you need it. What do you? These are the one you mostly use, or these are the default one?
These are default ones. The one that I'm mostly using is a 5-day 5-minute and 20-day 1 hour, depending on what kind of like how much history the stock has. If it just recently IPO, you won't have a lot of information. You'll have to go down to a smaller time frame. But usually from the 5-minute and up. I will never look at the 1-minute chart. All right. I used to look at the 1-minute chart when I first started trading, and you'll get faked out a lot because every single candle is only for 1 minute. You don't need to see every single minute. You want to focus on 5 minutes. It gives you a lot cleaner plays. All right, makes your life a lot simple as well. All right, so this is just my way of trading. These are the trends and stuff I look at. You guys, this is just like a little basic starter for you guys, but eventually you guys will find out what works for you, and whatever works for you, that's always best. All right, but this is just me giving you little tools of how I trade. All right, this is what works for me.
Can you go over the grid?
All right, the grid. All right, so yeah, so now we can get to the grid. All right, so we got the 1 day, 1 year. All right, so this grid in the background over here.
So how you have more than one chart.
Oh, okay, all right, yeah, so I'll do that. All right, so before I could get into the grid, let me explain what every single part of this chart means. So you have over here your ticker, so whatever you want to put, Apple, Tilray, Facebook, SPY, whatever, you're gonna be adding that. You're gonna type that in over here and click enter, and it would pull it up. All right. Now, if you want to link these charts together with anything, you're gonna use this piece over here. I'll tell you about linking a bit later. It's not too important right now. Right here, you have the current price the stock is at or where it closed during the day. During the day, you're gonna see this fluctuating. And right in this box right here, you'll have your bid, which is the B, and the ask, which is the A, right? So you're gonna see where the bid and the ask is right here, all right? Now you have the top number over here represents how much a stock changed for the day. So for Tilray, it went up $21 per share, and and below it would be the percentage change. So you have 50%, 50.91% change on the stock from yesterday to today. All right, that's what this represents right here. Now, this flexible grid over here and this product depth over here, I don't use these at all, right? So I don't really know too much about looking at these. I don't use them at all. All I'm really using is the charts feature right here.
What's the 50 and the 21 percentage again?
This the top one tells you how much the dollar amount that the stock changed, and the bottom one tells you the percentage amount that the stock changed for the day. So Tilray went up 50% for the day, and it changed from yesterday by $21. All right.
Thanks.
All right. Well. All right. So let's keep going. So share. Do not worry about this. Describer. You don't. All right. Yeah, you don't have to worry about this either. And click on that. Edit studies. So you could get a little shortcut over here to edit studies if you want to add something quickly. You have this gear if you want to personalize your charts. Pretty much you don't really have to mess with this either. Everything is pretty much set. All right. If you want to make time frames here. Now appearance. Okay, so um this is all personal based on what you like. For me, I like to have my candles filled. So for your chart type over here, you're gonna click fill up and you're gonna fill down, right? So you see how the red candles are completely filled in, but the green candles just have an outline. I usually like to have my candles filled in. So I'm gonna click fill up, and now you're gonna have full green candles and red candles. All right. The show wick, you want to always see the wicks. There's a lot of information contained in these wicks. And the doji is going to be white. Your when the candle is red, you want it to stay red. Now, if you want, you could choose whatever color. If you want a deep red, whatever, you could put it like that. Border up and border down. That's what that is. Let's see. Let me add another red here. So this is all just personal, right? So for me, I wanted my candles to be deep colors. So
We don't see the dozy actually. We see neutral tick, but we don't see dozy. What is the dozy means?
okay, so the doji is this candle right here. So you see how it's white? A doji is pretty much a candle that opens and closes at the same price.
So neutral tick. Okay.
Yeah, so that's where you're gonna get a doji. So for doji candles, you can set that one to white. It's pretty much nothing really happened in that minute. You also have another doji right here. Um, it went down to this point, but it closed at this point, so it's a doji candle. All right. Now that's all you really adjust here. Anything else, you could. That's pretty much just personal preference. What else? Color as volume ticks, preset colors, blah blah blah. Grid. So if you want to change your grid, I think I changed mine to black instead of gray. The background over here is black. And the grid is white. Yeah. All right. And you click apply and you're good. All right. So you see how it looks over here now? It's a little too dark actually, right? Let me set this up back. This is all personal preference, right, guys? We could keep it on gray. It's a little too bright. Oh, way too bright. All right, cool. Are you guys good with this? Yes.
I'm gonna get that gray.
How did I get the gray?
Yeah, like it's picky right now. It's like it's bugging me.
Yeah, your eyes, right? Background is the background gray, like which one? This one or the other one? The dots or the whole background itself?
The whole background itself.
Yeah, I picked this one over here. It's right next to it's the top left.
Cool.
All right, so we're good over here. Our charts are pretty much set up now and good to go. All right. Now, so that's your chart settings. This is your time frame. Preset time frames are already there. Style, this is also something to do with your chart settings. That's fine. Now drawings, right? So now, obviously, also another study set you want to load is one with no indicators on it, so you could kind of set your price levels, right? So I'll delete these two. I'll just keep the volume average. I'll click apply, and I'll save this study set as no indicators. All right, you guys see that? So now when I'm doing my levels, when I'm charting my levels, I like to use this with no indicators in order to see which specific levels I have on a stock.
Quick question on your volume average is set to 50 normally, right?
My volume average is set to what?
Is it set to 50 for your volume average?
No, 20.
20. Oh yeah, sorry. Thanks.
All right, good question. A lot of people probably missed that. All right, that's all right. So now you want to do your charts. So a lot of people ask me how I get those dashed lines across my grid. You're gonna click right here in the lower right side. You see where it says active tool. Right now it's a pointer, right? You're gonna click on that and you're gonna get all these options over here. Now the one that I'm mostly using is this one over here with the dollar sign and line. That's gonna give you your price level, and I'm using trend lines for this to notify to mark my patterns I see. But click on this dollar sign one for now. All right. Everybody's good up to this point? All right, so once you click on that, you're gonna look for levels. So when you're trying to find support and resistance levels, you're gonna be clicking on these peaks. You want to look at these peaks. You want to see more than 2 points where a stock either had some resistance or kind of went sideways on, right? So if you look here, you have a peak over here, and then market started dropping. If you look in the future as well, it kind of had some sideways action around the same point. So we could kind of mark this as a resistance level at this point, and you're gonna double click that. Right, when you double click it, now you're gonna get this red solid line. So for me, I like to keep it as the white dashed lines. It sticks out a lot more. You're gonna right click on that line. You're gonna click edit properties. Now, you're gonna change the color to white. You're gonna change the style to dashed. And you're gonna change the width of it to 2. That's what I find as my personal preference. All right, and you're gonna click save as default.
Can you show how to get there real quick again?
All right, so you're gonna right click on the red line. You're gonna click edit properties. And that's where you'll get to the properties of your price level line. All right.
Not working for me. Did you change the cursor?
Jay, if you try to draw a line and the same like came weird, how can you undo?
You could right click it as well to undo it. You're gonna right click it and you're gonna click remove drawing. All right. You guys good here?
Could you go over that? How you create a drawing?
All right. So you're gonna click over here on price level. You're gonna click over here in the bottom right where you have it's right next to where it says drawing set, and you're gonna click on price level on the top right. It's the second box from the top right. You guys got
Second
that?
box in top.
Good here?
Yeah, I got it. I got it.
All right, now you're gonna look just click anywhere on your chart. You guys don't really have to find a certain level right now. I'm getting a lot of notifications on my phone. Let me see what's going on. All right, I don't know what's going on here. Oh, okay, it's my group chat. All right, you guys good up to this point?
Yeah.
All right, so now double click anywhere on the screen. You're gonna get that red line. You guys got that point now?
Got it. Mhm.
All right, now you're gonna right click on this line and edit properties. All right, what I'm actually gonna do is I'm gonna change it to this a little bit bigger of a -1. All right, you're gonna change the color to white, and you're gonna give it a width of 2. All right, this is all personal preference, but I'm trying to show you guys how I set up my charts.
Got it. Thank you.
All right, cool. Now click OK, and you'll see it looks like this now. All right, you guys see that?
Yep.
All right, cool. All right, so after this point, now you guys are
Right,
pretty
how
much.
do you got the vertical lines, vertical red lines? The vertical red lines.
All right, so these vertical red lines, they only show up on the 4-hour chart and above.
Oh, okay.
So if you're looking at the 4-hour chart or anything above that, you're gonna see those red lines. What they represent is pretty much a new month.
Oh, okay. New month.
No, not a new month. What do they represent here? 9/18/2020, 9/21. Well, I guess it divides your charts up to specific dates. It's not a new month specifically. All right. So if
So
you
when
want
you
to find
chart, always look at that 4-hour, or maybe we can even do different way.
well, usually, all right. So I'll get into charting in a bit. This part that I'm going over here is just to give you guys a little update of how what every single feature on these on their
Sure.
charts do.
Sure.
All right. So we went through all this. Now we went through drawings already. So pretty much how to set your price levels. That's the drawing section. You guys know about studies. Now patterns, and not really worried about patterns. We're gonna draw our own patterns. And what else do we have on this? So you have your volume over here on the bottom with the average volume line. On demand, we get into that a bit later. And then you have these other features here on the right side, right? So you have a widget here for news. You click on that. You're gonna get all your updated news on the company that you're watching. You click on this L2 over here. This is gonna give you your level 2, so where the buyers and sellers are sitting on the stock. We went over that, the bid and the ask. You click here. This is gonna give you a quick buy and sell button if you want to buy shares. This phase score over here, I don't really use this. I don't even I think I don't even know what this is. It's probably a little bit like fundamental stuff. You're not really gonna worry about this. The chart is pretty much giving you your chart, so you're never really gonna take that out. And these buttons are just some quick buttons for buying and selling market orders. Active trader, this is also another quick way to buy and sell shares or whatever you're looking at. And time and sales, this pretty much works alongside level 2. Whenever you see orders going through, you're going to see your time and sales update as well, right? And then you have the last one, trade, right? Another quick access for buying and selling shares. All right, so that's pretty much everything about the chart over here. All right,
On the
guys.
active trader, that's where you see what people are buying, like what calls they're putting in.
Yeah, so on active trader during the day, you'll see where people put bids. So a lot of people put like 5 bids over here at 389.22. Usually this is in the hundreds, right? So this is 500.
Got it. Thank you.
All right. All right, so we're all good with here on the charts. Any questions on the charts before we go back to the PowerPoint?
Are you gonna show how to set up the grids, like
Oh, okay,
more
yeah,
than one
sure.
chart?
I'll do that before we go. All right, so now if you want to look at more than one stock at a time, so when you guys are now beginning, I recommend just watching 3 stocks. So what you can do is click over here on the top right, you see a big square. You're gonna get a little grid over here. Right now, you want to watch 3 stocks. You're gonna extend it from 1 box to 3 boxes. Right, when you click on that, you're gonna have room for 2 more charts now. Right, so usually I like to keep SPY all the way to my left, all the way to my right, and I put whatever else I'm watching on the other ones. Right, so I'm watching Tilray and I'm watching Neo. I'll put them on the other ones to the left. Right, so now you could watch 3 different charts at one time. Now, once you pull up these new companies and these new cells over here, you see they're all gonna have this look over here. You're gonna have to update each single cell, right? So you're gonna click here. You're gonna click this little study box right here. You're gonna click load study set, and you're gonna add your say we're gonna add our EMAs to this, right? Well, our SMA. You're gonna click that. Now, also you're gonna see that these volume subgraphs are always gonna be here. You're gonna have to remove them individually from each chart. All right, so we're gonna click chart settings, remove equities. You're gonna show volume subgraph. You're gonna remove that, apply, and okay. All right.
Do that again slowly.
So all these, you're gonna have to the same thing that you did with this one individual chart over here. You're gonna have to do them with all of them. All right, in order to get all of them to look like this. All right, so you see how this one doesn't have filled in candles? You're gonna have to go through each one specifically. Now, once you do it the first time, it will remain there for forever on all your charts. All right, so that's how you add the grid. Any questions on that, guys? All right, so no questions. Let's get back to the
How
PowerPoint.
did you exit it? How you exit it and get back to the regular one?
So you get
To
back.
like that view? To
Oh,
like that to showing all 3.
okay, so when you want to zoom in, you're gonna click on maximize cell over here on this little drop down menu at the top right, and you're gonna click maximize cell. All right, now if you want to exit, there's gonna be the same thing in the top right over here saying minimize cell. You're gonna click on that, and then
Cool.
get back to 3. All right. Now you could do whatever you want. You can add like as many charts as you want, but obviously the more charts you add, the smaller the other charts get, and you won't be able to see them as clear.
How do you remove the volume and leave the volume average again? Sorry.
How do you do what?
Remove the volume and just leave the volume average.
Oh, how do you remove it?
Yeah.
All right, so you're gonna click on this little lab bottle over here, this little analysis thing, and you're gonna click load study set, and you have your different study sets over here. Now, if you
Okay.
want, you could just click remove all studies, and it will remove everything. Oh, wait, there's a little volume bar over here.
Yeah, the second one they came up with. Yeah. How do you remove that one?
Okay, so you're gonna open up your maximizer chart. You're gonna click on the gear,
The
and
gear.
you're gonna go to get equities,
Okay.
and you're gonna unclick this volume subgraph over here.
Got it. Thank you.
All right, apply, and it's gone. All right.
Good.
All right, cool. Any more questions, guys? Pretty much your Thinkorswim is all set up over here. Well, at least the basics. If you find any other issues later on as you guys trade tomorrow, you guys will figure it all out. Um, you'll you'll have more questions, and I'll be on live stream. I'll answer them too. So you guys could definitely ask me questions whenever you have them in the future as well. All right. Let's get back to the PowerPoint.
Do you set up any scan or anything or here?
Yeah, we could get to the scanner a little bit later. I want to go back
Okay,
to the
got it. Sure, sure,
yeah,
sure.
so that will be more for the next PowerPoint that we go over.
Got it.
Right.
Thank
So we know all the components of our charts. So we pretty much know the whole go around about our charts over here. All right. So let's go to the next one. So how do the charts help us? So the stock charts help us predict the future price movements by analyzing past data, such as volume, the amount of people buying the stock. All right. Next thing you have is patterns. So when you're looking at your charts, the biggest thing we're looking for as day traders especially is patterns, setups that other traders are watching to execute their trades as well. Your support and resistance levels, so buy and sell demand zones, supply zones as well. Pretty much this is where a lot of stocks either rejected or bounced off of in the history. So these are where you're gonna get your support and resistance levels from. Trends, so which direction the stock has been consistently moving towards, that's gonna give you your trend. All right, so this is how charts help us. We're gonna be analyzing all this data on the charts. All right, next slide. So there's different types of charts. So on Robinhood, you guys will notice that this is the only kind of chart you have. You could change it to a candlestick, but it's not as accurate as Thinkorswim, right? So Thinkorswim is going to be your best buddy for analyzing stocks chart patterns, right? So this is a line graph, and this is your candle graph, all right? Candle graph might look a little bit complex, but that's because we are all just beginning. When I started too, I didn't know anything about these candles or what they mean. All right, the line graph was a lot more appealing because it's easier to read. Now let's get to the next one here. Line graph. All right, so line graphs, they plot the closing price across different time periods, then link them together with a line. The pros, it's simple to understand the trend of a stock, and does not. But the cons is that it does not provide information about what happened during the set time period. All right, so let's go back to this line graph here. So you at every specific time. So this is a 6 month chart. So say this is November, December, January. At that specific time, you're gonna get a point. So November's point, December's point, January's point, and then this line graph will just be plotting those points together with a line, right? So that's how the line graph is formed. Now you're not gonna know what happened. So this is January 2019. You'll just see the stock's point maybe was this 240. So you can see 240 here, but you don't know what could have happened on this day. You wouldn't know if it went up this high and pulled back to this low. You just know what the open and closing price was for the stock on this day. All right, so let's get to the next one. So candlestick chart. So each bar presents you with a high, low, open, and close price during a specific interval. They're more informative than the line charts and about the line graph, and shows you how the stock fluctuated within that time period. All right. Now this is how you read candles. So green candles, the upper shadow is over here. The biggest difference between the two is pretty much the body really. On a green candle, the opening price is going to be at the bottom. So if Apple opened at $100 per share today, it closed at $120 per share. Your open price is gonna indicate at the bottom of the green candle, and the closing price is gonna indicate at the top. So this top over here would be 125, and this open price would be 100. Right now, within that day, say Apple moved up to 135, you're gonna see that the wick would go all the way up to 135 over here, and say the lowest point for the day was $80 per share. You'll see the lower wick go all the way down to 80 over here, right? So this is where these wicks come from. These represent the ranges that the stock traveled within on that specific day or whatever time period the candle represents. All right, so if this is a 1 day, then it will represent the range for the day. If this candle represents a 5 minute, it will represent what happened within that 5 minutes. All right, now on the red candle is the opposite. On the body, the opening share price is going to be at the top. So if Apple opened at 100, and at the end of that day it closed at $80, you're gonna see a red candle for that day, and the closing price would be 80, and the open price is 100. All right. Any questions on candles, guys? I guess there's no questions. Let's go to the next one. Support and resistance.
Hey, Noi.
Yeah.
what's the bigger upper shadow line means in a green candle?
All right, so this upper shadow is pretty much where the highest point this candle reached, the stock's price reached within that day. So if this candle represents one day, this upper shadow is just that range that it went up, the highest points that it went. All right, so 135 is over here. This is 100. Well, this is 120 and this is 100. So the stock's price opened at 100. It closed at 125. But what you can tell by looking at this candle is that within that day, the stock went all the way up to 135, but it ended up closing at 120.
Okay, makes sense.
Right? It's the range that the candle moves between. When you guys watch your candles on the during the day, you guys gonna realize how these wicks form. You're gonna see that at some point during the day, maybe it was fully the green candle was fully all day over here, but since it started moving down towards the end of the day, you'll see this long upper wick. All right, so that's what these wicks represent. The range that the stock moved within that same time frame.
So Roy, you use candles for all the time, right? Whether long term or short, I mean intraday or anything, right?
Yeah, candles are used across all the charts. All right. So let's see what's going on here. So we're on slide number 33. There's about 20 more slides left in this first phase over here. How do you guys feel about finishing at 11? You guys enjoying it, or you guys want to leave it the rest for next week?
Save for next week because I gotta work at like 7 in the morning.
Yeah, so we're gonna run. All right, so 11 o'clock, wherever we're at 11 o'clock, we're gonna
It's
stop.
okay, Don. Listen, it's Jake. They don't care about shit like that.
Wherever we're at 11 o'clock, or we're gonna end over there, and then we'll continue where we left off next week. All right.
Don't forget, we could always come back and look at it because you're recording it, right?
Well, I'm recording up to this point that I'm doing right now.
Okay.
Yeah. All right.
Roy, can we get access to this?
The PowerPoint itself.
No, like,
The
well,
recording.
well, both if you can. That would be really, really helpful.
I'm gonna allow access to the recording for about 24 hours for the people that weren't able to view it. But the PowerPoint slide itself, it's still not finished completely, so I won't be giving access to that.
What about when you're ready, like when you finished up with it?
At that point, then I'll probably decide for you guys.
Yes, please, because I'm at work, man. I missed most of the things you were saying.
Well, you'll be
yeah,
able
so-
to view it in the recording. I'll see. Maybe I'll leave the recording up for a little bit longer.
Yeah, that would be helpful, man. Thank you.
All right, cool.
Leave it till after the weekend. Gives people time.
Yeah, maybe
Yeah,
from
definitely.
till the weekend then. All right.
Yeah, I just jumped in myself too.
A lot of information over here. All right, this pretty much how I was trained as well. It took about 4 days for this whole training to go through. All right, so let's keep going. Support and resistance. All right, so these are your support and resistance lines. This is how you're gonna notice them. You'll see a stock moving in a certain up and down pattern. The resistance points will be the top parts where the stock will be unable to break past, where selling pressure starts picking up, and the stock just pretty much rejects that point and starts trending down. And support levels are where stock would start picking up from that point. Buying pressure picks up, and the stock rebounds towards the upside. So think of it support and resistance lines as walls. You want to see these stock break out of these points for nice clean entries on different trades, right? Now let's go here. So what is support and resistance? The support and resistance levels are critical points in history where the supply and demand meet. All right. Here's an example of a support and resistance chart. So we have a stock trending up. Now we can see every time it gets to this point, it pulls back. But once it gets to this lower point right here, it bounces back towards the upside. Right. So if you see this happen twice, the stock went to this point, it pulled back, it went to this point again, and it pulled back one more time. Once we see more than at least two rejections or bounces off of a certain point, you could designate that as a resistance level, right? Same thing goes for support. If you see it bounce off of that point more than 2 times, you could designate it as a support level. right? So the stock was moving up. It had hit resistance and support a couple of times. Now the time that it hit, it was testing resistance this time. There could be good news that came out this time and started pushing the stock up. And it broke past this resistance, and now it started trending upwards after that point, right? So when stocks break through their resistance level, this level now turns into a new support level, and wherever it stops at when it's done trending up is where what becomes its new resistance level, right? So we see the stock broke past this resistance level over here. It pulled back a bit, then continued up, and then it pulled back pretty hard from that point, and it went back to the support level. Now, once it bounced off of this point over here, you can see it bounce again right here, and you could designate this part right here as a support level, right? Also, this resistance level, once they're broken, they turn into support levels. Same thing goes for support levels. If it's going on the downside, um, the support levels would now turn into resistance levals. All right.
So Roy, when you make a resistance or support level, where do you need to put the data in? Like now, what like is it year or
Well, you could chart it on any time frame, so it doesn't really matter what time frame you chart it. It pretty much works the same on all time frames.
it's going to be same? Okay.
Yeah, support and resistance
But
level.
generally,
It's
how I mean,
it's
when you do, I mean, how you pick it like generally?
it's generally the higher the time frame, the stronger the support and resistance level will be. So if you found that a stock was rejecting a certain point on on this daily on the yearly chart time frame, compared to the 5 minute, you have another level over there. The yearly time frame support level or resistance level would be a lot stronger. It would be a lot harder for the stock to break out past compared to the smaller time frame with 5 minute. All right.
Then you need to do that charting for everything, right? Every stock that you are picking, right?
Yeah, whenever you're looking at any stock, you should always do your charting and first thing first, you should always be looking for your support and resistance levels.
Okay.
All right. So what happens when a support or resistance levels are crossed? So what happens is when a stock breaks its support level, it is due to a lot of selling pressure, which causes the stock to go down, go towards the downside. All right. When a stock breaks its resistance level, it is due to a lot of buying pressure. Buyers break through the resistance and take the stock price higher. All right. So that's what happens when support and resistance levels are crossed. Usually it takes a lot of buying pressure or selling pressure on either end. All right. So here's some tips for support and resistance. Number one, identifying support and resistance levels is the first step in analyzing a stock. Two, support and resistance levels don't have to be exact numbers. So you'll see that sometimes your support might look like $100.77. Um, that's completely fine. What you're really doing when you're setting these levels is just indicating a certain point where the stock is like a level, a area where the stock is starting to either reject or bounce from, right? So for me, what I usually do is when I chart these levels and I see like a really weird number showing up, I'll round it up or down to the nearest whole number, right? That will give it a lot more easier to average based on multiple people's computer because everybody's pretty much looking at the same support and resistance levels as you. All right, three, if a stock is approaching a support level, look out for increased buying pressure and a potential reversal. Right. Also, the same thing. If a stock is approaching a resistance level, look out for increased selling pressure and a potential reversal. If a support or resistance level is broken, it signals that the relationship between supply and demand has changed, and the support levels now become resistance levels, and the resistance levels now become support levels. All right. Here's an example of trends. So we have an uptrend here, sideways trend here, and a downtrend. Right. So in an uptrend, you see higher lows. Stock makes its move up. It has another a high over here. When it pulls back, um, and it bounces towards the upside, you can see this as a higher low, and it continues to do that multiple times. Right. So right now, Tilray's in an uptrend. We keep getting higher lows, and it's overall in an uptrend. Right now, sideways trend when usually the market is choppy when it's in a sideways trend. We saw this happening on SPY last week around Monday through Wednesday, it was stuck at the 383 level, and it just was bouncing around between 383 and 381, I believe. Right now, a downtrend when the stock is making lower highs. So when it pulls back and it bounces, and then it rejects and it pulls back again. Now this is a lower high. This is a downtrend. All right. So I think this is a good point to leave off until next week. We're at slide number, what is this? Slide number 39. So about 10 more slides left in this one, and that should be it on this. All right. So we all good up to this point?
Yeah.
Yes, thank you.
All right, cool. So I'm going to go ahead and end the recording here.